Good morning. This is May Valensky with Driving Markets. For all those new listeners, there's been quite a few lately, the idea of driving markets is to give you a little bit of insight, update on where financial markets are at, what's likely to happen going forward, which is only an opinion, of course, and a little bit of education on financial markets. Sorry, just correcting my phone here because it keeps slipping. Okay, so let's look at what is driving markets today. Yesterday, the volatility on the markets was really low, quite flat. They finished in the evening. The US markets finished with a sell-off. Things to look at. Wow. So you got Facebook came down another 5% yesterday. It's now running at $220 a share. It's broken all support levels due to the very bad numbers last week and also the very poor forecast going forward of where they see themselves in the marketplace. They're also thinking of closing down the UK operation on Instagram simply due to European regulation and data rules. That will have a significant impact on their revenue going forward. Looking at Facebook, well, where does it go from here? Those were bulls. The bulls of new are saying, yeah, let's buy it here. It's a great stock and it can only rise. And then there's the bears that are saying, well, it's broken all support levels. It's got poor figures going forward and likely to go down even further. In my opinion, it's probably looking at the $200 level is probably a good area to go long of the stock. That's my opinion. That's what I think. I think it's probably a good stock to go long of longer term. The other stock I wanted to look at is Tesla. Tesla's been hovering around the 885, 900 level for a few days, a couple of weeks now. Its present level is 907. Maybe looking at a good time to get in, purely not because of the earnings ratio, which is still running at about 340 times earnings, which is crazy, purely on a speculative basis, because with Elon Musk there running the business, then you could see Tesla jump on any announcement, and therefore it might be something for those speculators to get involved in, where it could easily jump back up to $1,000 or $1,100 a share. So this level on the short-term graph, it could potentially be a buy. Overall, looking at the 10-year Treasury yields. 10-year Treasury yields came down slightly yesterday to 1.91%. Now, why do I look at the 10-year Treasury yield and why do I look at the bond market? The bond market is a very good indicator of where the traders and investors and bankers will see interest rates over the next year. And the higher the yield, then the greater likely that interest rates will be moving a lot higher. Saying that, how I see it is that interest rates in the States will probably end up this year at 2%, maybe 2.5%. And I don't think that'll be the end of it. I think in 2023, if inflation is not under control, which I can't see it being under control, simply because the central banks are well behind the curve and not doing enough in order to control inflation, you're probably going to see interest rates next year in the States at 4%, in the UK probably at 3%, and Europe anywhere between 2.5%. Europe is well behind the rest of the world and is insistent that, or some people in ECB, the European Central Bank, are insisting that inflation will take care of itself by the end of the year. I think they're living in cloud cuckoo land, but that's something else. As far as the developed countries, we're talking about Canada, New Zealand, Japan, Australia. We've got Australia and New Zealand raising interest rates. So across the board, you're going to have a rising interest rate environment and a rising yield environment on the bonds. The price of bonds is likely to fall further, and I expect the yield on the 10-year Treasury to probably hit anywhere between 2 and 2.05% in the next 3 months. As far as oil is concerned, oil came down for the first time yesterday since the 27th of January. It's at $92 a barrel. I do see oil hitting the $100 a barrel very soon in my opinion. I think we're talking about well above $100. There's global demand, there's lack of supply, there's other issues involved with Russia, Ukraine. I mean, if Russia invades Ukraine, which again I've said on many posts that this is likely to happen, then the price of oil will probably jump to $200 a barrel, which will send inflation into double digits very, very quickly, considering that oil is one of the major components of assessing prices. This week you've got the CPI in the States, Consumer Price Index, massive number in light of everything going on around the world regarding inflation and interest rates, and that would be a major indicator as to where the US Fed is likely to go regarding interest rates over the next few weeks. If the CPI comes in worse than expected, which I am expecting it to come in, I think it's going to be at the top end of the numbers, then it is going to have more pressure on the US central bank, the Fed, to raise interest rates more aggressively than has already been stated. I think you're talking about in the States of at least minimum 5 interest rate increases this year, which will have a big impact on the stock market. What's incredible is that the stock market is extremely stable at the moment and seems to have taken into its stride all of the bad news, which means any good news would push the markets much higher. Okay, right, that's mostly it. You can contact me on LinkedIn, WhatsApp, YouTube. You can comment on the YouTube, you can like the YouTubes, you can subscribe to the YouTubes. You can do me a big favor, spread out and broadcast the YouTubes as much as possible amongst your colleagues, friends, family, whoever needs it. Anyone who needs any input on where to open up a trading platform or where to open up a trading account, you can contact me. This is Mayor Valensky with Driving Markets, only trade with regulated firms. Have a good day.